Ford has officially shaken the entire auto industry to its core with a groundbreaking announcement that nobody saw coming. For decades, Ford has been a household name, but this latest move proves they aren't just trying to keep up with the competition, they're trying to rewrite the rules of the game. In an industry where automakers usually play it safe, Ford has taken a daring step that has forced every rival, whether it's General Motors, Toyota, Tesla, or even international brands, to pay attention. This isn't just another product launch, pricing update, or flashy marketing stunt. This is a full-on market disruption designed to capture buyers' attention, force dealerships to rethink their entire strategy, and send shockwaves through Wall Street and global markets alike. The timing couldn't be more dramatic either, with inflation, rising interest rates, and shrinking consumer confidence pushing car sales into uncertain territory. Ford's announcement lands like a bomb in the middle of this fragile environment, and the ripple effects are already beginning to show. Car buyers are suddenly asking new questions. Dealerships are bracing for tough decisions. Competitors are holding emergency meetings. And investors are trying to figure out whether Ford just pulled off a genius play, or set themselves up for a risky gamble. Either way, one thing is certain, Ford has blown the lid off the status quo, and the entire auto market will never be the same again. The big reveal, what Ford announced, and here's where things get even more intense, because what Ford actually revealed is far more than just another corporate headline. After all the speculation, Ford confirmed a bold strategy that cuts right into the heart of the auto market: dramatic price adjustments across key models, major incentives to undercut competitors, and an accelerated rollout of new technology that puts them years ahead of schedule. This isn't the kind of cautious, step-by-step announcement we're used to seeing from legacy automakers. Instead, Ford is going all in, targeting both traditional gasoline vehicles and electric vehicles in one sweeping plan. For buyers, this means lower sticker prices, aggressive financing deals, and access to tech features that were once considered future upgrades, but are now being made standard. For dealerships, it means adjusting overnight to a new reality where buyers suddenly hold more power in negotiations, and inventory that was once tough to move now has to be repriced before it starts collecting dust. And for competitors like GM, Toyota, and Stellantis, it's a wake-up call. They can't just sit back and watch, because Ford's announcement isn't just about today's sales, it's about redefining consumer expectations for tomorrow. The big reveal has turned into an industry shockwave, and every major automaker is now being forced to ask themselves one critical question: do they try to match Ford's boldness, or risk being left behind in a market that has just been flipped upside down? Immediate industry shockwaves. The auto industry didn't even have time to catch its breath before Ford's announcement sent shockwaves through every corner of the market. Within hours, analysts were scrambling to revise forecasts, dealerships were calling emergency meetings, and rival automakers were in damage control mode. Competitors like GM and Toyota, who have long relied on stable pricing strategies and carefully timed product launches, suddenly found themselves under enormous pressure. Tesla, which has dominated headlines with price cuts and rapid innovation, now faces the rare position of being outflanked by a legacy automaker using its massive scale to disrupt the game. Suppliers are equally rattled, as Ford's aggressive strategy means ramping up production schedules, renegotiating contracts, and finding ways to keep up with the sudden surge in demand this move is expected to generate. The shockwaves aren't just limited to the US either. European and Asian markets are watching closely, knowing that Ford's bold play could set off a chain reaction across global pricing models. Investors, meanwhile, are split. Some see Ford's announcement as a genius move that could capture market share overnight, while others fear it could ignite a brutal price war that drags down profit margins for the entire industry. Either way, one thing is clear: Ford has set off an earthquake in the auto world, and every major automaker is now scrambling to figure out how to respond before they get buried by the aftershocks. If there's one group feeling the heat more than anyone else right now, it's the dealerships. Ford's announcement may sound like a win for consumers, but for the people on the front lines of selling cars, it's a bomb that just landed in their showrooms. Traditionally, dealerships have thrived on markups, add-ons, and leveraging limited inventory to keep prices high. But with Ford slashing prices, offering unprecedented incentives, and shifting buyer expectations overnight, dealers are suddenly stuck in a high-stakes balancing act. On one hand, they're thrilled to see increased foot traffic as shoppers rush in, curious about the new deals. On the other, they're panicking over the value of cars they've already stocked, vehicles purchased at older, higher costs that now look overpriced compared to Ford's fresh pricing strategy. That means dealers are forced to take losses on some inventory, slash markups, and rethink negotiation tactics just to stay competitive. Beyond pricing, Ford's pivot also hints at a stronger push toward direct-to-consumer sales models, something dealers have long resisted but now might be powerless to stop. For decades, dealerships have been the gatekeepers between automakers and buyers. But with this announcement, Ford is essentially putting dealers on notice: adapt fast, or risk being left behind. It's a moment of reckoning for the dealership network, and the pressure is only going to build as the ripple effects of Ford's bold move spread across the market. Impact on car buyers. For everyday car buyers, Ford's announcement feels like the moment they've been waiting for. After years of battling sky-high prices, limited inventory, and dealers charging outrageous markups, consumers finally have the upper hand. Ford's bold move is essentially forcing the market to bend toward affordability and value, something buyers haven't seen in a long time. Shoppers who were previously priced out of new cars are now rethinking their options, because Ford's pricing cuts and incentives bring once out-of-reach vehicles back within budget. Families considering used cars may now turn their attention to new models, since the price gap is shrinking. Beyond just cost, buyers are also gaining access to advanced features that Ford is making standard: technology, safety systems, and EV upgrades that used to require premium trims or hefty add-ons. This shift is raising the bar for what consumers expect when they walk into a dealership, and it's putting pressure on competitors to match Ford's offers or risk losing market share. But the benefits don't stop there. Buyers now have leverage in negotiations like never before, since dealerships scrambling to move older inventory are more willing to deal. In short, this isn't just about cheaper cars, it's about empowerment. Ford's announcement has flipped the script, turning an era of frustration for buyers into one of opportunity, and consumers are seizing the moment with both hands. Ford's master strategy. Behind the shock and excitement of Ford's announcement lies a carefully calculated master strategy that reveals just how far ahead the company is thinking. Ford didn't make this move on a whim, it's part of a long-term vision to dominate both the traditional vehicle market and the rapidly evolving EV landscape. By slashing prices, adding incentives, and making advanced features standard, Ford is doing more than grabbing headlines. It's conditioning consumers to see Ford as the brand that delivers value without compromise. This is especially important as the industry shifts toward electrification. Buyers have been hesitant about EVs due to high costs and limited infrastructure, but Ford is tearing down those barriers with aggressive pricing and expanded EV offerings that feel accessible rather than luxury only. At the same time, Ford is leveraging its strongest assets, its truck and SUV lineup. By aligning its most profitable vehicles with competitive pricing and future-focused technology, Ford is securing loyalty from existing customers while attracting a new wave of buyers who might have looked elsewhere. And perhaps the boldest part of this strategy is timing. Ford has struck at a moment when competitors are cautious, markets are shaky, and consumers are frustrated. This isn't just a sales tactic, it's a positioning move, designed to force rivals into a defensive posture while Ford takes the offensive. It's clear that the automaker is playing chess while others are playing checkers, and if their plan pays off, Ford could reshape the auto market for the next decade. Winners and losers of this move. Every bold play in the auto industry creates winners and losers, and Ford's announcement is no exception. On the winning side, consumers are the clearest beneficiaries, finally seeing prices dip, incentives rise, and technology upgrades flow into vehicles that used to carry premium price tags. Ford itself also stands in a strong position if this strategy succeeds, because it could rapidly capture market share and cement its reputation as the automaker that forced affordability and innovation back into the spotlight. Even smaller EV makers might see indirect benefits, as Ford's push helps normalize electric adoption and grows consumer trust in the technology. But while some celebrate, others are bracing for pain. Legacy rivals like GM, Toyota, and Stellantis face an uphill battle. They either slash their own prices to keep up, risking billions in lost profits, or watch as Ford siphons away customers who now expect more value for their money. Tesla, too, is suddenly in an awkward position. The EV giant has built its brand on innovation and price adjustments, but with Ford charging into its territory with competitive pricing and mass-market scale, Tesla risks losing its unique advantage. Dealerships also land on the losing side, at least in the short term, since they're forced to absorb losses on overpriced inventory and adjust to slimmer profit margins. And then there are the investors, who could go either way. Some see opportunity in Ford's aggressive expansion, while others fear a destructive price war that could erode profitability across the industry. In the end, Ford's move doesn't just shake the market, it reshuffles the leaderboard, creating a new set of winners and losers in a race that has suddenly become far more intense. Wall Street and investors' reaction. The financial world wasted no time weighing in on Ford's announcement, and the reactions have been as dramatic as the news itself. Wall Street thrives on bold moves, but it also punishes risk, and Ford's strategy has sparked both excitement and unease among investors. On one side, bullish analysts are praising the move as a masterstroke, arguing that Ford has just positioned itself as the most consumer-friendly automaker in a time when affordability is everything. They see the potential for explosive sales growth, increased market share, and a stronger foothold in the EV race, all of which could push Ford's stock higher in the long run. On the other side, skeptics are waving red flags, warning that price cuts and massive incentives could eat into profit margins, trigger a destructive price war, and pressure Ford's already tight operating costs. Investor forums are buzzing with debates. Is this a short-term gamble to grab headlines, or a long-term play to redefine Ford's brand identity? The market's immediate response has been volatile, spikes of optimism as traders rush in, followed by waves of caution as analysts remind everyone of the risks. What's clear is that Ford has forced Wall Street to pay attention. Investors can no longer treat Ford as just another legacy automaker. They now see it as a disruptor willing to take risks usually associated with tech companies like Tesla. Whether that boldness translates into sustained growth or financial turbulence will depend on execution, but one thing is certain: Ford has lit a fire under Wall Street, and the investment community will be watching every step they take from here. Global ripple effects. Ford's announcement may have originated in the US, but its impact is reverberating across the globe. Automakers in Europe, Asia, and South America are already feeling the tremors, because when a giant like Ford rewrites the rules at home, international markets inevitably follow. In Europe, where affordability and EV adoption are constant battlegrounds, Ford's aggressive pricing could pressure Volkswagen, Peugeot, and Renault to rethink their strategies or risk losing ground. In Asia, especially in markets like China where EV makers are flooding the industry with competitively priced models, Ford's bold approach signals that it's ready to compete on their turf, not just at home. Japanese automakers such as Toyota, Honda, and Nissan, long known for their reliability and steady pricing, now face growing pressure to innovate faster and deliver more value at lower costs. Even emerging markets are paying attention. Countries in South America and Africa where affordability is everything could see Ford's move as a game-changer, making vehicles more accessible to middle-class buyers. Beyond automakers, global suppliers and parts manufacturers are also bracing for change, since Ford's accelerated timelines and scaled-up production will ripple through international supply chains. Perhaps the most intriguing effect lies in global consumer psychology. Buyers worldwide are beginning to question why cars cost as much as they do, and if Ford can slash prices in the US, why not everywhere? In short, Ford hasn't just disrupted its home market, it has fired the opening shot in a worldwide reset of how cars are priced, marketed, and sold, and the ripple effects are only beginning to spread. The road ahead: what's next for Ford and the industry as the dust begins to settle? One thing is clear: Ford's announcement wasn't just a headline-grabbing stunt, it was a turning point that could redefine the auto industry for years to come. The road ahead will be anything but smooth, but that's exactly what makes this moment so critical. For Ford, the challenge is execution. Can they sustain lower prices while maintaining quality and profitability? Can they scale up EV production fast enough to meet demand, or will supply chain bottlenecks slow them down? And most importantly, can they keep the momentum going before competitors regroup and strike back? For the broader industry, the future looks like a battlefield. Rival automakers will be forced to make tough choices: join the price war and risk shrinking margins, or hold steady and watch Ford siphon off market share. Dealerships will have to evolve quickly, shifting from old-school markups to new models of customer service and direct-to-consumer integration. Buyers, meanwhile, are walking into a new era of empowerment, where affordability, transparency, and technology aren't luxuries, they're expectations. On a global scale, Ford's boldness has raised the stakes, pushing international brands to rethink their strategies and forcing the entire market to move faster toward electrification, innovation, and accessibility. The road ahead is uncertain, but one thing is undeniable: Ford has taken the wheel of the auto industry's future, and everyone else is now playing catch-up. What happens next could be the beginning of a new golden age for consumers, or the most brutal shakeup the industry has seen in decades. The bigger picture: is this the future of the auto industry? Ford's announcement isn't just about one company making a bold move, it's about the future of the entire auto industry. What we're witnessing may be the early stages of a complete reset in how cars are built, priced, and sold worldwide. For decades, automakers have relied on steady price increases, dealership markups, and incremental upgrades to maintain profits. But Ford's decision has exposed the cracks in that system, showing that consumers are no longer willing to tolerate inflated costs or outdated sales tactics. The bigger picture here is that the industry is being dragged into a new era, one defined by affordability, transparency, electrification, and speed. Companies that adapt quickly will thrive, those that cling to old models may fade into irrelevance. Ford has drawn a line in the sand, and whether other automakers like GM, Toyota, Tesla, or Volkswagen want to admit it or not, the game has changed. The future will belong to those who dare to be bold, and Ford just proved that sometimes, the most dangerous move in business is not taking a risk at all. Consumer power shift, a new era of car buying. Perhaps the most profound effect of Ford's announcement is the shift in power dynamics between automakers, dealerships, and consumers. For decades, buyers have felt trapped in a system where prices kept climbing, negotiations were stacked against them, and transparency was almost non-existent. But now, with Ford rewriting the rules, consumers are walking into showrooms, or online portals, with unprecedented confidence. Shoppers know they have leverage, because dealerships can't justify inflated markups when Ford is publicly slashing prices and adding value. This isn't just about a cheaper sticker price, it's about a cultural reset in the way people view car buying. The expectation of affordability, honesty, and advanced features is becoming the new standard, and once consumers taste that, there's no going back. Rivals who fail to recognize this shift risk alienating buyers who will flock to brands that put them first. In essence, Ford has sparked more than just a price war, it has fueled a consumer revolution. Buyers are no longer passive participants in the auto market, they are the driving force, and automakers worldwide must adapt or be left behind in this new era of car ownership. The risk factor: could this move backfire on Ford? As bold and game-changing as Ford's announcement appears, it's not without enormous risks. By slashing prices and ramping up incentives, Ford is walking a fine line between gaining market share and sacrificing profitability. If demand surges beyond what supply chains can handle, shortages could frustrate buyers and undo much of the goodwill this strategy was designed to create. On the flip side, if demand doesn't rise fast enough, Ford could be left with razor-thin margins and billions in potential losses. There's also the danger of sparking a destructive industry-wide price war. If rivals like GM, Toyota, and Tesla retaliate with their own aggressive discounts, the entire market could spiral into a race to the bottom, good for consumers in the short term, but devastating for automakers' long-term financial stability. And let's not forget the stock market. Investors can be fickle, and if quarterly earnings take a hit, Ford could face massive sell-offs that threaten its momentum. In short, Ford has made a daring gamble that could either crown them as the industry's new king or leave them vulnerable to collapse under the weight of their own ambition. The move is bold, but the stakes couldn't be higher. So here's the bottom line: Ford didn't just make an announcement, they lit a fuse that's now burning through the entire auto industry. Prices are dropping, dealerships are scrambling, competitors are panicking, and buyers are stepping into a brand new era of car shopping power. Whether this turns out to be a brilliant long-term strategy or a dangerous gamble, one thing is undeniable: the auto market will never look the same again. Ford has forced everyone, GM, Toyota, Tesla, and beyond, to rethink their playbook, and the ripple effects are only just beginning. Now the big question is, do you think Ford just changed the future of the car industry for the better, or are we about to see a price war that could crash the market? Drop your thoughts in the comments below, I want to hear what you think. And if you found this breakdown eye-opening, make sure to hit that like button, subscribe, and turn on notifications so you don't miss the next big update shaking up the auto world.